You sat down, and the thing you brought up is something I've noticed as well. Foreign exchange is the global litmus paper. It is the litmus paper of the system. And boy, it seems awful measured and calm given the cacophony around it.
Yes, absolutely. In fact, one of the most common questions we face is why is FX not moving as much as rates markets are in particular? And for us, the simple answer is FX, in fact, tends to move in two types of situations. One is if you have really big idiosyncratic developments in the G10 space. That's been the case in the UK for the last couple of years. And the other is when the world is so extreme, either in the good or in the bad, that maybe the shock is common, but the response is different across countries. And we're not quite there yet. Things are bad, but they're not quite bad enough to really drive FX.
What have capital flows done? Is there still a flow to the United States as the bastion of last resort?
Yes, there still is. And in fact, I think the idea that the US is still the safest place to put your money is still very much alive, but it's taking a little bit of a hit. Last week was a big week, seeing impact through the ISM surveys. So we're seeing the beginning of some skepticism whether the US can stay insulated from the global slowdown.
Ebrahim, where do you see actually dollar from here, given all the trade concerns, I guess the trade uncertainty? Is it all down to what the Fed does? And, will the Fed have to deliver one or even two more insurance cuts?
So we think that overall the outlook for the dollar is still constructive. And the two primary reasons for that are, one, again, that the US is still in a relatively better spot, so a bit more resilient against the global downward forces on the growth side. And two, that very importantly and unusually, the dollar still benefits from a carry advantage. And in a world where interest rates are very low, it's just very expensive to be short the dollar. But we have to keep in mind that we are now seeing the manufacturing ISM in the US below 48, and historically the dollar hasn't really had any traction in the couple of months after that. So in the very short term, I think we're mostly neutral, but we think we still haven't seen the dollar peak in this cycle quite yet. And that's despite the fact that we think that the Fed will continue to ease, driven by incrementally weaker data. I think the minutes yesterday and Chair Powell's remarks showed once again that their communication has been very neutral of late, but there's probably still a little bit more weakness in the data to come. So the Fed, we think, probably cuts another 2 times, once in October and once sometime after.
Wow.
But that isn't really the main driver of the dollar from here, as it hasn't been for the last 18 months or so.